Hey everyone, welcome to the August 2022 real estate update for Calgary. I hope everyone is having a fantastic summer, and I'm excited to give you an update on these stats because we are in a changing market, and I know there has been a lot of questions around interest rates and where this market is going, and hopefully we can make some sense out of it for you with these stats. And I'll fill you in with a couple of my predictions for what it's worth, even though, of course, I don't have the crystal ball either. Let's just take a look at our absorption rate. This is our first indicator of what's going on. And no surprise, you can see that our 43.76% of the houses listed sold. We are now in a more balanced market. And believe me, this is not a bad thing because that means that at this moment, the prices are holding and there's still a reasonable demand for real estate. So the buyers that are buying, you have a little bit of a breather here. You can actually shop without necessarily houses selling, with multiple offers in one day, that sort of thing that was happening at the beginning of the year. So, there's a breather. But on the selling side, at this moment, the prices are holding, and I'll talk about that in just a moment. Hopefully, fingers crossed, we'll just stay in this balanced territory for quite some time, and hopefully we won't, see sales drop to the point where we get back into a buyer's market. I'm really hoping we don't see that again. You can see our benchmark price we are looking at detached houses here. 643,600 is our benchmark price for Calgary for a detached house. And you can see that we have, we're dropping ever so slightly on pricing. We peaked at 648,500, and we're at 643. So there's a very slight correction, with being a balanced market. Let's just talk about the pricing. This is maybe a good time to do it because I saw a report the other day that suggested that real estate prices in Canada were going to drop like 18%. And this came from some chief economist. And the only thing I don't like about those kind of reports is they're a very bold prediction. And even though these chief economists do look at data, they're not necessarily can predict these 100%. And the other thing to consider is when you're speaking for all of Canada, real estate's very local. What happens in Toronto, especially what happens in Vancouver, is not really how it goes here in Alberta. Case in point, if you look at 2017, 2018, prices were rapidly rising in Toronto and Vancouver, and we were actually in a buyer's market where we had price softening. So we don't tend to follow the trend in Alberta. At this moment, one thing I do know for sure, we have people moving here. We're going to have a net migration in Calgary, probably around 25,000 people. Our economic environment is doing quite well right now in Alberta. Not only are oil prices high and there's job creation going on in oil and gas, we've had a lot of tech companies move to Calgary, and we have other sectors of our employment market that are doing quite well. Quite frankly, the only real negative for Calgary right now is interest rates. Now, don't get me wrong. That's going to play a role. There are some buyers right now that no longer can buy a house because they can't qualify at the current interest rates. So that is a negative, but it's really our only negative. So I don't know that we're going to see this big 18% correction. To put that into perspective, take a look at this benchmark price of 643. For house prices to drop 18%, if you bought a house, say, for $600,000, and you're going to sell it for $120,000 less than you paid for it, that would be a market collapse, in my opinion. That's a major correction. I think the only way you would see that dramatic of a correction is if there were literally no jobs and people just could not pay for their house. My experience has been, if you have a job you're doing okay, but you're thinking of maybe just moving to another home because you like something bigger or downsize or whatever the case is. But if I came over to your home and told you that you have to sell it for $100,000 less than you paid for it, chances are pretty high you're probably just going to go, you know what, I'll just wait until the market gets better and we'll hold on. And I think we'll see a lot of that. So the market might slow down in volume. I don't think we're going to see the masses reduce their house price just to sell it. Like I said, it would have to take a lot of job loss for people to do that. So I think maybe the volume of sales will probably stay more in the balance section. And on top of it, these interest rates aren't horrifically high. Let's put that into perspective. Right now, you can still get a 5-year fixed at 4.59, according to the mortgage brokering firm in my office that I just spoke with the other day. There's mortgage lenders that are offering that. I don't know if all of them are, but there are lenders offering that. And you can get a prime minus 1% variable rate. So at this moment, you could still even get in at 3.6%. So, this is not horrifically high interest rates either. This is still manageable, especially for the price range that we have in Calgary. So there's a little insight for you as to what I think is going to happen with our market, and we'll see if I'm right. But I have a feeling that that's how things are going to play out. All right, let's move down into the hard numbers. You can see that 1,136 homes out of 2,596 sold. So that means, look, you're going to have to be realistic if you want to sell your home. Being that this is a balanced market, you've got to be pricing it competitively. And, we saw some people earlier this year that were really just throwing a dart against the wall, coming up with a big number and hoping for it. Or even some people were deliberately pricing them lower and creating a bidding war for it to go up. You're not going to see that now. So now the buyers are going to scrutinize your home a little more carefully. They're going to compare. They're not going to necessarily write an offer the first day they come over. They probably will want to see several homes, and they're going to make a slower decision, and they're going to really weigh it out because they can. And that means if you're selling, you're going to have to be willing to compete competitively. And it goes back to making sure your home is marketed properly, making sure that you get your home ready so it looks its best. These are just simple things, but it's amazing how many people still don't do it. And when you look at all these homes that didn't sell, I can almost guarantee you, after me doing this for 22 years, it's usually they either want too much money or they simply haven't prepared the house the way it should look. And you walk into the home and you're disappointed because it just doesn't look good and a lot of things need to be repaired, and that this doesn't add up when it comes to the money. So you have to consider that. That's why I have a whole team of people that I work with that help my clients get their home ready for sale. And we have such a great marketing team that we work with as well to make sure we're getting it out to the right buyers. In a competitive market like we're in now, that's what you have to do. Now, let's take a look at the market distribution. It's quite amazing that $500,000 to $600,000 is 24% of our market. And in second place is $600,000 to $700,000, and third place is $400,000 to $500,000. So it just means that there's not a lot of properties under $500,000 that are detached in Calgary. That's just the way it is. And so it's good. I mean, the fact that our market is still pretty healthy and strong, and we're still quite more competitive on price than Toronto and Vancouver, which is one of the reasons why we're having a net migration move here. This market has stayed really strong, the $1 million to $1.5 million, 5.36% of the market. So this has stayed really strong. 611 homes have sold this year between $1 million and $1.5 million. That's a pretty healthy market. All right, let's take a look at the semi-detached market. So here we've got 40.14% absorption rate. So now slightly below the detached market. with a benchmark price of 576,900. Pretty healthy. We're not too far off, how much a detached home costs. So different if you were to go back 15 years ago, because, you just didn't see as many attached homes sold. And, we've now reached a point where that's just fairly normal. There's a lot of really nice attached homes that are sold in Calgary. And you can just see by the demand that we saw in 2022. I mean, just look at the increase in pricing that we've seen year over year. It's quite phenomenal. And if you bring it down to the hard numbers, so 173 out of 431 listed sold. So similar scenario. I mean, obviously our sales ratio has dropped. I mean, we're down 22% in volume year over or month over month. So it's definitely softened. Our price distribution, 300 to 400,000 is, almost the same as our 4 to 500. I mean, you've got 43% of the market under $500,000. But look at that $700,000 to $900,000 where the infill market is. I mean, that is 18% of the market, and that's pretty healthy. So there's a lot of people that are comfortable buying, infills, and there's a lot of people that like to get into a semi-detached home that doesn't have condo fees, under $500,000. So really healthy market, and I think we're probably going to see a continuation of this moving forward. So now it gets really interesting with, the row houses, or otherwise known as townhouses. 58.78% absorption rate. So, this is staying really strong. We're seeing a surge, and it's quite phenomenal because it was only a few years ago that nobody seemed to be buying these very much. The absorption rate at one point was only at 16% in like 2017, 2018. So this is amazing to see this. Our benchmark price is 362,600, but I guess if you think of it this way, townhouses, they're priced reasonably. You can get in as an investor and rent them out, or the fact that they do have a basement, oftentimes have a garage, a small backyard, so they're quite affordable living, and yet they kind of feel like being in a house. It's it's the next best thing, obviously, but that price point is, I think, is what's really attractive, is that you can still get in at $362,600 for a benchmark price. We definitely have increased from last year. I mean, $294 up to $353, but again, that's still, $362,600, but that's still a pretty reasonable price point to be in to get into these properties. And it shows by the demand. 432 out of 735 have sold, so it's stayed, relatively steady. We haven't dropped that much for the last couple of months, so it's good to see that market is still doing well. And it's no surprise that 42.41% is the amount of properties that have sold. I mean, that's literally almost 50% of the entire market. And you can see it just drops off a cliff as soon as you go from $400,000 to $500,000. So that's really the sweet spot. And it just tells you there's a lot of people that want to buy these townhouses under $400,000. I think they make a really good investment property. I think they're a good property to buy. Even if the market was to shift and drop a little bit, this price point's not going to be affected too much. So I think there's some really good value there. And if you are looking to invest, I think they're a really good property to invest in if it's in the right location. Now the apartment condo market. Here we are at 32.55%. It's dropping. I mean, we peaked at 50% absorption rate in April. The benchmark price of $278, and it's been interesting following this to see that the apartment condos have finally this year. It's literally been since 2015 since we've seen this market really come back. So it's really good to see that. You can see it was 2015. We peaked at 292. So at 278, we're still not really where we were in 2015, but we are slowly getting there. I know I comment on this every single month, but we're slowly getting there, and that's good to see. 513 out of 1,576 have sold. And it's the same thing. You've got, if you're going to sell in this kind of a market environment where the absorption rate has dropped, you're going to have to be willing to take the steps necessary to get your condo ready to sell it. You know, make sure it looks its best. Clean it like you've never cleaned before. Stage it properly. If there's something broken, fix it. You know, just if it needs painting, you know, paint it. I just can't even begin to tell you how small little things can make such a major difference when you sell. I work with a contractor, and you know, we've done this so often where we've come in and spent anywhere from $1,500 to, we'll say, $20,000 maximum for some houses, but most of the time, you know, we're under $10,000 on getting a property ready for sale. And for that small investment, we've proven it over and over and over again that you can get at least a 50% return on that money, but it also helps sell your property. So think about that as you're considering if you're going to be selling. Buyers look for properties that look good. Obviously, the most highest demand price point is under $300,000, and that's again almost 50% of the market, and it does drop right off when you go to $300,000 to $400,000. We just don't have a big luxury market in condos. I know I've been trying to sell one for 1.1 million this year, and you know, we're stuck in here where there is literally only 10 that have sold in the entire market out of all the sales in Calgary. So we are primarily a townhouse, semi-detached and detached condo market type of environment, or property and market environment, unless you're in this lower price point for apartment condos. That's just where the demand is. But I will say, I think there's some great investment opportunities here as well. These are great to get into for downsizing, especially if you can, you know, pick something really nice up, which is available under $400,000, and you should do just fine. So my invitation, as always, is if you are buying and you want to get a better understanding of what this market is doing, or what pockets of the market would be best to buy in, and get some information on interest rates and strategies, I'll throw in, you can also assume, if people are willing to let you assume their mortgage. I just did one the other day where we're working on a buyer that's assuming a 1.94% interest rate. The seller's willing to let them do that. They do have to qualify, but they're able to get in and take over 4 years at 1.94%. So that is a possibility for you. We can talk about that if you reach out to me. Same with the sellers. If you want to offer your lower interest rate mortgage upon qualifying, there's no liability to you if the bank approves it, but it can also incentivize the buyer to buy your property and potentially have the buyer pay a little more money with the savings on interest rates. And these are just some of the little strategies that we can use. I mean, I've been doing this a long time, so I've been through markets like this before, and we did a lot of assumption of mortgages back in the early days of my career, so I'm quite familiar with it. So just reach out to me, and all that information will be provided. I hope this has been helpful, and I will look forward to seeing you in September.